share? Or no, you're just going to be speaking? Did you have a presentation? Or,
Who,
Mr.
me?
X? Uh-huh.
Yeah, I'm going to be sharing my slides.
Oh, that's right. I made you
Yeah.
a co-host, so you'll be able to.
Yes. Yeah, I'm
Okay.
going to be sharing my slides. Yes.
Oh, okay. So that happened real quickly. So we are live now. Well, it is at the 7:32, so we're going to go ahead and get started. Again, thank you all for registering today. And if you are watching us on Facebook Live, I'll put the link in the chat where you can register and join us in the Zoom, or you can put some questions that you might have as we go through. You can put them in the chat. So, so today's webinar is using what you already know to build wealth in the stock market, presented by Community Outreach Partners for Empowerment, also known as COPE. My name is Joanna Adavy. I'm the president, and this is in collaboration with Mr. X Stock Market Academy. We're thrilled to have you here as
Mhm.
part of our financial literacy series, and Mr. X is kicking this off. We have curriculum March, April, and May. And so this is the first of the financial literacy series where we empower individuals and communities with the knowledge to make informed financial decisions. Whether you're new to investing or looking to enhance your existing knowledge, this session is designed to give you practical strategies to build long-term wealth. Before we dive in, we're going to go over a few housekeeping items. This session will last approximately uh, 45 minutes with time for Q&A at the end. Feel free to drop your questions in the chat. We'll address as many as possible. Stay engaged, take notes, and most importantly, have fun learning. So now let's get started. I'd like to introduce Mr. X from Mr. X Stock Market Academy, who will guide us through today's session. Mr. X is a self-taught in this stock market field, and in stock market education is passionate about helping individuals like you take control of their financial futures. So Mr. X, the floor is yours. Thank you.
Thank you so much, Joanna. I'm excited to be here. I'm excited to collaborate um, with community outreach partners for empowerment. I know that we have a lot of similar things in alignment in terms of really, helping, individuals, families in various, communities. So without further ado, I'm going to share my screen and I'm going to get right into the presentation. Oops, let me go back. Okay, so as Joanna just mentioned, my name is Mr. X. I'm the founder of the Mr. X Stock Market Academy. We're a stock market educational company focused on teaching and empowering individuals, families, and communities how to build wealth in the stock market in a safe and efficient way. As Joanna just mentioned, the title of this webinar is Using What You Already uh, know to build wealth in the stock market. Um, but just to give you a little additional information, about myself, I have a master's degree in business administration from Northeastern University, which is located in Boston, Massachusetts. And when I was a student there, my major, I had a double major. It was innovation, entrepreneurship, and also marketing. So I have a lot of academic training in terms of being knowledgeable about what it takes to start and grow, a successful business and also how to market a business. Also have experience in advising and coaching individuals in terms of how to launch a business, whether it be um, in the process of, let's say, selling a product or selling a service, developing a business plan for operational or for funding purposes, developing sales strategies, market strategies, business development strategies, etc. Um, I'm also a self-taught stock market investor. So if I can learn how to invest, so can you. And if you're currently investing in the stock market right now as well, I'm sure you could learn a number of things from me as well, because not everybody knows everything about everything. I've also simplified stock market investing because a lot of people think this is very complicated. But hopefully, through the duration of this this webinar here, you will see that it's not if you think that it is. But I teach in very simplistic terms. I relate it to your everyday life, growing my own portfolio on my own. And with, over, 20 years of business experience, working in different industries, has given me insight into, what it takes for a business to become successful. Because essentially, when you are investing in the stock market, you're investing in a business. It's no different than any business that you see in your local community. So if you could evaluate a individual business, let's say in your local community that may go up for sale as an example, then you have the ability to evaluate companies in the stock market, which are businesses as well. The only difference is that they are doing business in multiple countries. Okay, so once again, the title of the webinar, using what you already know to build wealth in the stock market. So why is the webinar called that? Because one of the things that I realize is that we all come from different backgrounds, right? Different professional background, educational backgrounds, and through these experiences, right, we can use this existing knowledge that we already have, okay, in our professional work life, in our professional business life, even in our, past or current academic life, and apply that knowledge to investing in companies in the stock market. So we have three main concepts here that you see on this slide: what to do, how to do it, and when to do it. So steps to build wealth in the stock market, buying individual stocks. So there's many different ways to make money in the stock market, as many people may know. In this webinar here, we're going to focus on buying shares of stock in individual companies in the stock market. Okay, so you have four main concepts here on this slide here: look, research, go, and make. So what I'm going to be teaching today is based on real life example. Okay, this is not a theoretical webinar where the information you're going to be learning is something that necessarily came out of a book and someone doesn't actually apply. This is a real life teaching principles in terms of how I evaluate companies that I have my money currently invested in the stock market, and students that actually have joined my academy. So let's start off with the first idea, look. So I start off with the idea of looking at companies in the stock market who sell various products or services, right? And I say to myself, do I utilize that company's product or service on a day-to-day basis, or quite frequently during the week, or quite frequently during the month or the year? And the reason why I start off with that idea is because if I'm using a company's products or services on a regular basis, that means that I'm very familiar with that company's product, service, the company in itself. And that is why also um, how I would say to myself, or you should say to yourself, well, if you're using the company's products quite often, obviously you like the product, right? It solves a problem in your life, right? You view that product or service to be better than competitors, because every single company or business has competitors. And if you're using or you prefer a particular product from a particular company, you know why you like it better, right? And you should be able to explain to someone, if they ask you, why do you buy that particular item? You like that item better than their competitor. You should be able to explain that to someone. So the whole thing with you looking at products and services that you use on a day-to-day basis is that you are familiar with that company's product or service, right? And that company, right? Because we don't believe in my academy, the Mr. X Stock Market Academy, in investing our money in companies that we don't understand. If you just think about it logically, does it make sense to invest in an industry that you don't understand? No, it doesn't, right? If you don't know anything about the oil industry, right? Or about what it takes to, let's say, build out, let's say somebody came to you and they said, I want to start a business where I want to dig for gold, right? Dig for gold, right? And have a gold mine or something. If you have no experience in that particular business, right? It doesn't logically make sense for you to invest in that type of industry, right? Until you become knowledgeable about it, right? Educated about it. So once again, in the Mr. X Stock Market Academy, we look at products or services that we use on a day-to-day basis as a starting point because we are familiar with those companies. We know why we like those companies. We know the problem they solve in their life, and we know why we think those companies are better than their competitors. So we can start there with evaluating companies in the stock market, but it doesn't have to stay there because there could be a particular company or a particular industry that you are aware of that is up and coming, that's thriving, that maybe is going to change the way how we live, and you may see an opportunity. That's perfectly fine. What do? You go and you do some research. You become educated about that company, its competitors, this industry, etc. So that's the second concept you see here on this slide. Research. Do the research on companies that you know or companies that you want to learn more about. So where do you go and do that research? Well, you go on the internet, you go to one of the search engines, you type in the name of that company, and after the name of that company, you type in investor relations page. Okay. And once you do that, you're going to see a number of search results that come up that will tie back to that company. And then you will click on the investor relations page of that publicly traded company in the stock market. And when you get to that company's investor relations page website, you're going to see a lot of information about that company. You're going to see what year was that company founded, who are the key individuals that run that company, such as who is the chief executive officer, known as the CEO, who's the chief operating officer, also known as the COO, who's the chief marketing officer, right, etc. You're going to see a bio that describes the company, its products, its services. There may be some information about its industry. There even may potentially be some information about the company's competitors. So you're getting knowledgeable and you're getting educated about that company, right? But then you need to take it a step further. The third ideal, you need to look at the company's financial data, okay, or also known as its financial statements, right? There are three major financial statements that every publicly traded company and every business has. The first statement is called the income statement. And in the income statement, it has two main sections. You have the income that the company is earning through sales, and you also have the company's expenses, what it takes for them to run that business, right? So you want to look at a company's income statement, right? Let's say the most recent one over the last 12 months. So you look at a company's income statement, let's say in the year 2024, right? Look at the company's sales, look at its expenses, subtract its total expenses from its total sales or total income, and that will let you know whether or not that company generated a profit in 2024. But you don't want to just look at 1 years of income statement. You want to look at a number of years of income statements because you want to see, is there a track record? Is there a history or historical record of this company sales increasing from, let's say, 1 year to the next? And also, are they generating a profit? Because companies that are typically whose sales are increasing from 1 year to the next, that's communicating to you that there is more demand for that company's products or services in the current year than in the year before. So as an example, these companies in the stock market, right? They have billions of dollars, of sales, right? So I'll just use I'll use like very low numbers just to make my point. Let's say in 2024, a company's sales were $6 billion. And then in 2023, their sales were 4 billion. And then in 2022, their sales were 2 billion. And then in 2021, their sales was 1 billion. So they went from 1 billion to 2 billion to 4 billion to 6 billion. You see growth in their sales. That can only happen because there's more demand for their products or services. Otherwise, their sales would not have increased. Okay. But at the same time, when you look at each individual income statement in each of those years, subtract out the expenses from within that particular income statement and see what the profit is in that year. Were the profits in that company in 2024 higher than it was in 2023? Were the profits in 2023 higher than it was in 2022? Were the profits in 2022 higher than it was in 2021? You want to see, is there a trend of the sales increasing and the profits are increasing? Because ultimately you're investing in these type of companies, or thinking about investing in these type of companies because you want to make money. And as the company's sales are increasing and their profits are increasing, that means the value or the money that you have invested in that company, or companies plural, is increasing. Because typically companies who are generating money and generating profits, the probability or the likelihood that those type of companies would, let's say, go out of business anytime in the near future is highly, highly unlikely, especially if the company has a competitive edge that really separates it from its competitors. For example, you have companies that they can increase their prices, okay, for their services or their products, even in an inflationary environment, and people won't drop off or won't give up their product or service. Why? Because they've marketed themselves and they produce the best products, right? So some people may say, I'm not gonna, even if the prices go up a little bit, I'll still pay more for it because their products are second to none. They have the premier products, the best products. And not only that, if it's a business that uses these companies' product, they may say, the challenges or the headache of switching out this company's product or service and going to their competitor is going to be too much of a hassle or aggravation for my company. So I'm just going to stay with this company and utilize their products or services, even though the price has went up. So the first thing, you look at the income statement. The second thing you look at is look at a company's cash flow statement, which tracks cash coming in and out of a company at any particular point in time. It's very similar to, let's say, a bank account that you have your income going into, whether it's from your job or your business, and also expenses that come out of there. You want to see from one year to the next, is that person's cash position increasing in the current year, let's say 2024, than it was in 2023? Is the cash position in 2023 higher than it was in 2022? Is it higher in 2022 than 2021? All right. Because that's showing you that the company's value and profits are also increasing. And just compare that to your own personal situation, right? If you have a job, right, and you said to me, every single year since I've been working at this company, I've gotten a raise. I could conclude a few things. Well, if you got a raise every single year, you must be a very productive employee. Because otherwise, why would they keep giving you a raise every year? Typically, companies don't just, give free money away to people that are non-productive, right? So you must be very productive in your company. Or unless you're in, let's say, maybe a government job and your union has negotiated a certain pay raise increase, then maybe that's why you may be eligible for that. But if you put that aside and has nothing to do with a union-based job or anything, and you're really getting these annual pay increases because you are more productive at your private company or the nonprofit that you work for, that means you're doing an exceptional job, because probably everyone at your company is not getting a raise every single year. So think about that as a comparison to a cash flow statement, whereas the cash position in the company is increasing over time, the value is increasing. And then finally, you're going to look at a company's balance sheet, which lists a company's assets. What is an asset? An asset is anything that has value. So companies, right? They sell products, they sell services, so they get money, right? Cash. Okay, they have cash in an interest-bearing account. That's an asset. If the company produces a physical product, they may own a building, right? Which is a factory, right? That building has a dollar value. That's an asset. If a company has, let's say, a patent, which allows them to produce a product, let's say over a 20-year period where no one else can come into the marketplace, none of their competitors, to produce that product exactly the way that they produce it, right? That's a patent. You see that typically with a lot of these pharmaceutical companies that manufacture drugs or medication. They get a patent, and then after that patent expires, then you see the generic version of that drug that comes out into the marketplace. Well, that patent has a dollar value. So these are some examples of assets. But then companies, they have liabilities. What are liabilities? They're debt, right? You have short-term debt, you have long-term debt. If you add a company's total debt together and you subtract it from its total assets, that will let you know whether or not at that particular point in time, whether or not that company has a positive or a negative net worth. So you can look at a company's balance sheet in the most recent full year. All right, let's go back 2024, and you can see whether or not they have a positive, negative net worth. And you can compare that balance sheet in 2023 to the balance sheet in 2024, 2022, 2021, and so forth and so on. And you can see over time, from one year to the next, is the company's balance sheet, is it positive? Is it increasing from one year to the next? If the answer to that question is yes, that's great, because that means the value of the company is increasing. All right, so let's do a recap now. We started off talking about the company's income statement, which tracks its sales and its expenses, okay, to see, is this company generating a profit? But we don't want to look at 1 year, because 1 year um, of good sales, of good profit, is not enough information to make an educated decision to say if this is a viable company or not, because it's not enough track record, right? It's like you need more history. It's like, if I'll give you a better example. If you were to go to the doctor, right, and you needed to have a medical procedure, and you started asking the doctor questions about themselves. How long have you been doing this type of procedure, or been this type of doctor? Oh, I've been this type of doctor for the last 20 years. Oh, 20 years. Okay. What school did you graduate from? Oh, I went here. Oh, okay. I've done this. I've done that. You probably would feel more confident, okay, with that type of information than having that procedure done maybe by a doctor who's in that same industry but only been doing it for 3 years. Why? Because the one who's been doing it for 20 years, they have a longer track record that you could evaluate and feel confident that if they perform this procedure on you, that the likelihood that you won't get injured is much lower, right? So it's the same thing when you look at these companies' financial statements, right? You could go back 4 years, 5 years, 6 years, 8 years, 10 years. It all depends on how long the company. The longer you go back and look at any company's financial statements, income statement, you can see a long history of 8 years or 10 years or 6 years in a row where sales are going up and the company's profitable. That should make you feel confident about that company and their stability, especially if there's a slowdown in the economy. They have enough cash, right, to kind of weather the storm, to pay their bills, pay their employees, to maintain their business's existency, because they have enough cash to sustain themselves, right? And as I mentioned, in my academy, we don't believe in investing money in companies that don't have a proven track record of making money, because those companies are more riskier, and that's why companies that are referred to as they just went public, like IPOs, initial public offering, those type of companies, right, that don't have a long historical track record, there's more risk associated with those companies. It doesn't mean you can't make money with those companies, but there is more risk associated with those companies, because you can't really say to yourself confidently that they're going to be around in the next 3 years, 4 years, 5 years, 6 or 7, because they just went public, right? Maybe last year, they only been around a year. Maybe they just went public at the beginning of this year, January 2025. So you don't know. You don't know, you know? So we teach in my academy in an overall an investment strategy where that we don't want to lose money, right? We don't want to lose money, even though the possibility is always there. Okay. We teach a strategy of people not losing money. Okay. And then finally, after you have done this research and this analysis, you make a stock market watch list. So what is that? That's a list of companies. It could be, let's say, maybe anywhere between 5 to 10 companies, as an example, that you've researched, their financials, their industry, their competitors, um, new products or services maybe that they're working on, and you make this list. You go look at the company, and you see what is the company stock price per share. Okay. And when you see that stock price per share, you make a determination if you feel that that stock price per share is selling at a good or fair value. So let me give you an example. Let's say there's a company that you want to invest in, right? You've done the research, you feel confident, right? The stock price right now is trading at $150 a share. After you do your research, you feel that the price right now is too high, or the company's overvalued. So all you do is just continue to watch that company. They're on your list, right? And if you see a significant pullback in that company's stock price, where it goes from, let's say, $150 a share to now it goes down to maybe, let's say, $110 a share, or maybe it goes down $100 a share because of some maybe negative news that has come out into the marketplace. But you believe that that negative news is short-lived, meaning that it's not something that is going to hinder the company's growth. It's something that is temporary. It's like, for example, I may say to you, well, how you feeling today? You say, I'm not feeling too good. Oh, what's wrong? Oh, I have a little cold. Well, generally speaking, if you're in pretty decent health, right? And you take the supplements you need to take and do what you need to do, you're going to overcome this negative feeling or this cold that you have. And maybe within the next week or so, you're going to say, hey, Mr. X, I'm feeling good right now. It was short-lived, right? It didn't last that long, right? So a company stock could be trading at 150. Some negative news comes out. It goes down to 110. It goes down to 100, right? Because people decided this negative news, I don't want to hold it anymore. As they start selling out of it, that's your opportunity now to go in and buy as many shares of stock in that particular company at a discounted price. Okay. And when the stock eventually rebounds, okay, where it will go from $110 back to 150, you just made $40 per share. Or if it went down from 150 per share to 100, and now it goes back up to 150, now you made $50 per share, depending on how many shares that you purchased. Okay. So that is a strategy on how to buy something of value at a discount. Okay. Um, and that's how you could, one strategy in terms of how you could build wealth. Now, this is a high level overview of what I'm talking about in terms of evaluating individual companies in the stock market and buying individual companies. Okay, it's more intricate and more detailed than what I'm describing to you right now, but at least you get a high level overview. And if the stock can rebound from its decline of now going down to 100 to back to 150 or going surpassed, that's your profit per share, depending on how many shares you bought, whether it was 20 shares, 30 shares, 40 shares, 50, 100, that's the profit that you made per share in that particular company. Okay, so briefly, I'm going to talk about opening a brokerage account. For those that are on the webinar right now that currently have one, just bear with me. This is for individuals that maybe do not have one currently at this moment. A brokerage account simply is a place where you can buy and sell stock, okay, and options, which are the right to buy and sell a stock at a particular price point. I'm not going to get too much into options, but you open up one at a financial institution, could be a bank, your local bank, could be an investment bank, but you want to look for a company that has really good customer service. Many of them you can talk to someone on the phone, 24 hours a day, 7 days a week about your account. An account that has really good stock trading data where you can analyze different investments that you potentially want to invest in or that you currently have your money invested in. You open up one simply in your name. If you're married, you can open up one with your spouse. So now you and your spouse own that brokerage account together and the investments within that brokerage account. Simple to open. Basic information they're going to ask you: your name, address, phone number, email, social security, just like you're opening, a checking or savings account at a bank. But at the same time, with you investing, right, in the stock market, you should have some investment goals associated with your investments in your brokerage account, right? So you could have multiple investments within one brokerage account, by the way, but you could also have more than one brokerage account as well. All right. But let's just follow me with this concept here. You have one brokerage account, okay? And you have multiple investments in there. Each investment has a different purpose. So maybe one investment is just to grow your money as a hedge against inflation. Inflation here in the United States is typically anywhere between, under normal conditions, 2 to 3%. That's what the Federal Reserve typically is trying to keep inflation, and for those of you who don't know who the Federal Reserve are, they are the central bank here in the United States that regulates the interest rates. Um, on institutions that actually, let's say, that are charging people interest for money. So your local bank, the interest rate that they charge you on a home loan that you may have, a business loan that you have, even the interest rate that credit card companies, charge, so forth and so on. If you have a card note, the interest rate that the Federal Reserve sets influences that. Okay. Because like banks, for example, a lot of them, they get money from the federal government. But is that investment that you have in your brokerage account, you're utilizing it as an investment to have your money growing at a rate higher than inflation? Over the last 90 years, as an example, generally speaking, the stock market, generates anywhere between 8 to 10%. And typically, the bank accounts, they don't really pay much, right? Maybe you may find one after looking for a long period of time, a high yield account, but a lot of them, they don't pay anything. You may not even get a percent on your money. So if you could have your money in a vehicle that has shown historically that it will generate anywhere between 8 to 10% on your money over a longer period of time, you're doing far well than having your money in a savings account in a bank that's not even earning 1%, right? Maybe that investment in your brokerage account is for your retirement, right? Maybe another investment in your brokerage account is for your child's education, right? That you set up maybe for them to go to college, trade school. Maybe you have some money in that brokerage account to help you to pay off some debt that you have, or maybe you're trying to accumulate a certain amount of capital so you can use that money as a down payment to buy a home. But essentially, you should have some goals associated with any investments that you have in a uh, brokerage account. Because if you don't have any goals associated with that investment, how will you know whether or not how would you know when is the best time to sell out of that investment, either all of the investment, sell a portion of the investment, or that the investment is actually going to generate a rate of return based on how much money you need from that investment. So you need to have some investment goals with your investments. But there's also benefits of investing in the stock market long term, right? Compound interest. It allows you to build your wealth rapidly. Okay, so one of the nice things about the stock market is that compound interest works in your favor because you're actually able to grow um, your money through interest compounding, right? Which is allowing your money to grow in your benefit. Whereas some type of debt, like for example, credit card debt that's not paid off in a timely manner, and someone is just paying the minimum, With the interest rates fluctuating here in the United States, you could be paying a high interest rate. It'll take you a very long time. That interest is actually working against you. It's not helping you to build wealth. It's taking away your wealth. Okay. Also, long-term investing allows you to save money on taxes from your investment accounts. In particular, if you're investing in individual stocks. Okay, especially when it's time for you to sell, if you decide to sell. Also, it's a way to build generational wealth, and it's not a get rich quick scheme. So it's not, oh, it's March 1st. I put in, um, you know, $20,000 in this company in the stock market, and by March 31st, that I'm looking for that investment to go from 20,000 from March 1st to now 100,000 March 31st. That's highly unlikely. That's highly not probable unless you are involved in some very high risk activities in the stock market. However, long-term investing can allow you to build your wealth. When I say long-term, I don't necessarily mean like uh 10, 15, 20 years, whereas long-term could be that. Long-term could be for somebody 2 years. You know, there's investments in the market that I've seen where people have doubled their money in 2 years. That is tremendous. Okay. As or even shorter than that, but you just really have to know how to evaluate different companies and different trends in order to kind of identify, those type of companies. But there are extreme benefits for long-term investing. Okay, so we're going to do a recap here. Stock market investing steps on buying individual stocks. Okay, so milestone one. Once again, look at products or services that you use on a day-to-day basis. The reason why you're doing that is because if you're using a company's products daily, weekly, monthly, or yearly, you are very familiar with that company. You know why you like that company. You know the problem it solves in your life, and you know why it's better than its competitors. Because if you didn't think it was better than its competitors, you would not continue to buy that company's products or services. Okay. So that's a good starting point. But there are other companies that are not necessarily used every day by consumers, such as you and I. But you feel that company will be worth more money in the future than it's worth right now. So go do the research on that company or even the companies that you use on a day-to-day basis. Don't just invest in a company just because it's using daily. You still need to get more information. Do the research, go online, look at that company's investor relations page, read everything you can read up about that company from the time that it started. If it started 20 years ago, learn everything about its inception when it started 20 years ago, all the way up to today. Learn about the products and services that it sells. Learn about what makes it unique. What is its competitive advantage? What is that thing that will protect that company from losing market share or losing customers, okay, against its competitors? What trends is it working on to take advantage of, which will help to explode or catapult the growth in the company in the future, right? But also make sure that these companies that you potentially want to invest in, are they making money? Okay. Just think about it realistically. Somebody comes up to you and your family and they have an existing business. They want to open, let's say a restaurant, and they want to open up a second location, right? Would you invest your money in that family member's restaurant business if they said they want to open a second location? If they said to you that I've been in business for 5 years and every year that I've been in business, I haven't generated any money, you probably wouldn't do that. Or if you saw that, you know, their sales were extreme in the sense that one year it was extremely high, and then the next year it went extremely low. Then it went back really high, then it went really low. You would probably say, why you have such a big dramatic fluctuation or change in your sales revenue from one year to the next? What's going on in your company? It seems very shaky, unstable, right? So um, look at the company's income statement, look at its sales, look at its expenses, see, is the company generating a profit? But don't just look at one year of sales. Look at maybe at least a minimum, at least 5 years, Go back 5 years or more and see, is there a trend of sales increasing and profits increasing? Look at the company's cash flow statement. See, is their cash positioning increasing from one year to the next? Go back maybe minimum 4 years, 5 years as a starting point. You can go back further. Then also look at a company's balance sheet, okay, where you see the company's assets, things they own of value. You'll see their liabilities, subtract their liabilities from their assets. See, do they have a positive or negative net worth? Look at your own personal situation, everything you own a house, right? You may own maybe some antique artwork, right? Maybe that artwork has a certain value if you had decided to sell. Maybe you own some memorabilia, right? Maybe if you're into sports, you have a collection of baseball cards that go back to, I don't know, maybe 40 years ago of those top players. Those cards probably worth a lot of money if you were to sell them, right? That's an asset, right? Money you have in a bank account, that's assets. You have debt, right? Student loan, credit card, maybe a car note. Add up your total liabilities, subtract it from your assets. That will let you know on a personal level if you have a negative or a positive net worth. And it's the same way how you would look at individual companies in the stock market, okay? But we're looking for companies that have positive net worth, especially over a period of time, right? You make a stock market watch list of a few companies that you want to invest in. Okay. Your brokerage account, you open it up. If you don't have one open, or if you have one open, you have it open. You put cash into the brokerage account, and the cash position is just sitting there. You haven't bought anything yet, though. It's just sitting there. You're watching the companies that you want to invest in. You have your goals on why you investing in this company. And then when you see an opportunity to buy shares of stock in those individual companies, when you see a price that you're comfortable with, or a price that where you feel is best valued at its current moment in time, and then you will go in and buy as many shares of stock in that company. So once again, like I said, this is just a high level overview of steps to investing in the stock market by buying individual companies in the stock market. Okay, so briefly, I want to talk to you about some of the paid webinars that I have within my academy, Mr. X Stock Market Academy. So I have a webinar titled How to Build Wealth in the Stock Market. Okay, and I'm going to go into detail what it's all about. Stock market investing fundamentals and how wealthy people build wealth in the stock market. So my How to Build Wealth in the Stock Market, this is a 3-hour live stock market workshop webinar that I teach. And some of the bullet points you see here on this slide is actually what this webinar consists of. So I start off with laying the foundation for successful stock market investing, where I'm dealing with your mindset. Okay, because if you don't have a positive mindset in terms of how you approach stock market investing, just like if you to do anything in your life, it doesn't matter what I teach you, you're setting up the conditions for yourself to not be successful. So I start off with your mindset, okay? But then I move into educating you about different investments in the stock market, because one of the things that me and my team have realized is that a lot of people that are currently investing in the stock market, if you were to ask them specific questions about different investments that they hold and why do they hold them, and what are the pros and cons or advantages and disadvantages of different investments, they really cannot answer those questions. Okay. And it's really key. So we teach you about the pros and the cons, or the advantages and disadvantages of mutual funds, index funds, target date funds, individual stocks, exchange traded funds. Because if you don't understand the advantages and disadvantages, how will you know that that is the right investment for you, that you should have your money in? You won't know. Okay. We also teach you different stock market investment strategies. We teach you on a much deeper level about investing in individuals, companies in the stock market. So in this particular webinar, I'm actually going to go to maybe 1 or 2, maybe 3 different companies, and I'm going to go to their income statement. I'm going to analyze it with you, and I'm going to say, look at this company's income statement. Look at it in 2023. You see what their sales, excuse me, 2024. You see what their sales are? Okay, you see what their expenses are. Here's their profit. Let's compare that to 2023, 2022, 2021, 2022. So I'm going to teach you how to analyze these companies' income statement, their cash flow statement, their balance sheet, so you can feel confident that these companies that you potentially want to invest in, whether or not they're making money or not. I'm going to teach you how to evaluate the price of the company's stock per share, as an example, for individuals, is selling at this price. I'm going to show you how you could evaluate whether or not this is the right time to invest in that company, or should you just wait until the right time comes. Okay. I'm going to teach you why wealthy people love to invest in individual companies in the stock market. I'm going to teach you, in my opinion, why you can't depend solely on a 401k retirement account at a privately owned company, or 403b retirement account at a nonprofit or government sponsored plan solely for your retirement. Because if you do that, potentially the type of retirement that you may have, you may not generate the amount of money that you want to generate to have the type of retirement that you are looking for. I'm going to teach you about how to prepare for a stock market crash when buying individual stocks, and also how to prepare for a stock market crash in a retirement account. I'm going to teach you how to not make the mistakes that other people have made from investing in the stock market, so that you don't have to make those same mistakes. I'm going to provide to you investment resources that you can utilize on a day-to-day basis that can keep yourself knowledgeable and abreast of what's going on in the stock market on a day-to-day basis. And there's some other things you're going to get with this as well. So that is a webinar, by the way, for people that are currently investing, the how to build wealth in the stock market workshop webinar. Now, stock market investing fundamentals, this is for somebody, they're not even investing in the stock market. A lot of parents like to purchase this for their, young adolescent children or young adults. This is for people that are absolute beginners. So we start with basics. What are stocks? Different stocks. Why invest? The different exchanges: New York Stock Exchange, NASDAQ, S&P 500, Dow Jones Industrial Average. We analyze the income statement, cash flow statement, balance sheet, the 10K report, why you should be investing, what makes certain stocks great picks. This is a 2-hour workshop webinar that I do live, so you'll be able to interact with me in real time as you are here today. Also external factors that affect a stock market, and you get investment resources as well with this workshop webinar as well. How wealthy people build wealth in the stock market. So I talk about how they invest, why they love to invest long term. I talk about why people lose money in the market. I talk about money skills that everyone should know. So even though my company focuses on stock market investing, okay, and educating people about the stock market, in any of these 3 live workshop webinars that I teach, I'm bringing in other information that I'm aware of to help you in your wealth building journey, because I understand that stock market investing is only a piece of the puzzle for your wealth building, right? So that's why you see the last bullet point, the 3 pillars of wealth. Okay, what are they in my opinion? Stock market investing, real estate investing, right? Starting and owning your own business, whether it's full time or part time. Okay. If I was to throw a 4th one in there, I would say life insurance. Okay. It can be used to build wealth. It's not something that, because there's different types of life insurance. There are policies that you can utilize while you're alive to make money and to build wealth for yourself, as opposed to just a policy that your beneficiary would just benefit from you passing. Okay, this is a 3-hour workshop webinar, how wealthy people build wealth in the stock market. Okay, so here are some testimonials of students that have joined my academy. I won't read what you see on the screen, because you can do that on your own. But a number of people have joined the academy, very satisfied with the information that they've learned. They've made money. So we're really here to empower you to learn how to invest in the stock market and manage your accounts. Okay. And once you learn how to do this, okay, this is a skill that will be with you for the remainder of your life. You know, we live in a capitalist society, okay? And at some point, if you never learned how to make your money work for you, you will never be in a situation where you've ever built any wealth for yourself, because you can't build wealth by trading time for money. Okay. Wealth building comes through leverage. Okay. Let me give you an example. Um, if I owned the company and I sold a product, and I was one of the salespeople in that company. And I'm the only salesperson in the company. As examples, a one-person company, right? There's only so many people I can meet on a day-to-day basis to do a presentation and to make and to sell my product or service. There's only so many people, right? Because there's only one of me. But if I had 10 people working for me that were salespeople, and I gave them the right to sell that product as I'm selling, right? So now you have 11 people selling that product on a day-to-day basis, 5 times a week, right? Monday to Friday, right? I'm leveraging the ability for my company to make money, because I'm making money not only off the sales that I'm making, but I'm making money off the other 11 people that are working for me. That's how wealth is built. Okay. Wealth is built through buying or investing your money in an appreciating asset. What's an appreciating asset? Appreciating asset is when you bought something at one price and it grows in value at another price, right? You bought shares of stock in a company at $100 a share, and then the next minute you turn around, it's worth $500 a share. That's appreciation. That's how wealth. You bought a house at $100,000, right? And in 10 years or 20 years, it's worth $300,000. That's how wealth is built. Nobody's income, typically, unless you are in a very high paid industry, um, you're not making money at that rate, that growth rate, where you could say to yourself, where that, if I was to stop doing this activity right now, based on the fact that I did it for a few years, now I'm wealthy. Very few people are in that, athletes, right? $1 million contract, get $1 million a year. You manage your money, you get injured, you can't play your sport anymore. Well, you made so much money that if you manage it properly, invested it, you don't need to work anymore. Very few people are making that kind of money where if they get injured or stop working, that they could just say, I don't need to go look for another job. you know so wealth is built through leverage, and investing your money in the stock market is leverage, because you're not managing these companies in the stock market. Someone else is managing it, running it, right? And while you're sleeping in your bed, or you're going about your daily life, the company's selling products, selling services, the value of the company is going up, as long as they're hitting their sales forecast. And that's how your wealth is going up. And that's why people will say, wow, if I would have invested X amount of dollars in company XYZ 5 years ago, it's worth X today, right? Appreciation, right? So that's how wealth is built. All right. So here's some reasons why people join my academy. They want to learn how to properly grow their money in the stock market. They want to learn how to properly grow their existing stock market investments faster, because they see that they're growing too slow. In particular, their retirement accounts, right? I have here, they want to learn how to catch up in their retirement savings, especially if they're behind. You're going to need $1 million or more for a comfortable retirement. Okay, if you haven't thought about it already. You take $3 million, you pull 4% of it on an annual basis. That's what, $120,000 a year. So let's say that's what you needed to live, or how you wanted to live. Are you close to that 3 million? Ask yourself that question. They want to learn how to build wealth for their children, grandchildren, pay off debt. They love the lifetime support. So when you join my academy, you can still have support from me and my team to answer any questions that you have about the workshop webinar that you signed up for, or anything that's going on in the market on a day-to-day basis. Okay. So here's a nice surprise for you, all of you attendees. Thank you so much for registering, attending today. My paid stock market webinars, how to build wealth in the stock market, 3-hour webinar, stock market investing fundamentals, 2-hour webinar, how wealthy people build wealth in the stock, a 3-hour live webinar that I teach. These are normally valued at $499, but I sell them at a discounted price, $375. But by you being here today, thank you so much for your time. We're going to take another $50 off of that. So you can get any one of these workshop webinars for a one-time fee of $325. All you have to do is go to my website, pick the one you want, use coupon code 50. You can see the dates that I have here. If you're interested in signing up for any of them, don't worry about the dates per se. If they conflict with your schedule, we can work around your schedule so that you can receive the training. And also, as the collaboration that I have with Community Outreach Partners for Empowerment, 25% of any of the gross sales from anyone signing up for any of these workshop webinars here that you see on this slide will be donated to Community Outreach Partners. So you're supporting Community Outreach Partners in its efforts to help various communities with different initiatives. At the same time, you're empowering yourself to learn this information because they do not teach this information in your traditional school system. They don't teach us how to build wealth. They educate us on various subject matter, right? Reading, writing, arithmetic, science, social studies, a couple different things, how to prepare for a job, but they don't teach us how to build wealth, how to leverage money, how to reduce our taxes legally. We don't learn that. So that's stuff we learn just from life experience. So if you could leverage the education that I have, because when I learned about this information, the way that I learned about it, I said to myself, why didn't I learn this many, many years ago? And when I looked at so many people in various communities that, maybe had some challenges financially, I said, if they knew half of what I knew, maybe they wouldn't be in that situation, And then when I learned how you can take small sums of money over a short period of time and just from consistent investing, you could build wealth for yourself, an everyday person, a person with modest means. It amazed me how someone could take $5 a day, which is what, 30 days in a month, right? $150 a month, right? And over time, they could amass hundreds and thousands of dollars for their children, and they didn't start out with that. That amazed me. So I'm here to just bring this information to communities and educate people, and also let people know that one of the things I really love about the market is that it's one of very few investments that every single person can get involved into, because you don't need hundreds and thousands of dollars to be a stock market investor. Whereas certain businesses or investments, you may need hundreds, thousands of dollars, to be a real estate investor. You got to start out, do different things. I can teach you how to build wealth in the stock market. You got $5 a day. $150 a month, you got $1,000, doesn't matter what you have. I can show you how to do it. And if you have retirement accounts and you don't really understand how the stock market works, you're really putting yourself at risk, because you have your money there investing in the market. So you get real life proven strategies to build wealth. The commitment from my company to you be successful. We give you a list of stock picks as well. People always ask us, what are some companies we can invest in? We're going to give you growth stocks. We're going to give you dividend stocks, and you can research them. Also, you have the lifetime support from my company to access any questions about the market. One-time fee. Disclaimer here, I'm not a financial advisor. Do your own research, as the information and tips shared here are for educational purposes only, not investment advice. We decide to invest without doing your own research. You do so at your own risk. I want to thank you. So my website is Mr. X, stockmarketacademy.com. Please follow me on Facebook, follow me on Instagram, and we're going to get into the Q&A right now. But I'm just going to briefly stop sharing my screen, and I just want to briefly show you my website here. So here it is, Mr. X Stock Market Academy. My tagline is learn how to build generational wealth. We teach you how to properly research stocks, develop a strategy, the best time to buy. We teach in simplified ways. You'll see my picture here with my bio here, why people have joined, and here's just a recap of what you would learn in any of the paid webinars that you can see here, which I just explained to you. And then the registration, like I said, you see a workshop webinar you want to sign up for, if its date doesn't conflict with your schedule, all you have to do is just click on it, click where it says continue, put your name in there, and then you just put in the code 50, and then you'll get the discount. So we'll open it up to questions right now.
While people are gathering their thoughts, I want to thank you again, Mr. X, for just being a wealth of knowledge to share. Even in this free session, that's quite a bit of information, and I hope people feel a little bit more informed than they were prior to. Please feel free to take yourself off mute, or if you just want to put your questions in the chat. If you're watching on Facebook Live, feel free to put some questions in the comment section, and I will read them out to Mr. X. This is your opportunity to ask questions. Oh, okay. And yes, you could put in your contact information, and I'll copy it and paste.
Yes, I just put it in here. I thought it was coming up clickable. I don't know why it didn't come up that way.
Yeah, I can put it right because I just
there it is.
Copy it.
Okay, all right.
Okay, do you see the question?
Yes, the question is, can you talk more about some of the pitfalls of using different brokerage accounts? Okay. So different brokerage accounts have different, interfaces in terms of, them being, some may be a little bit more user friendly, to others, right? Also, some brokerage accounts allow you to buy fractional shares, so the example where I was saying a company's stock price may be like, let's say, trading at $150, per share. Let's say, for example, someone wanted to invest in that type of company, but maybe, they could only afford to buy, a few shares based on the fact that it's trading at $150. Well, some brokerage accounts will let you just invest whatever you want through fractional shares, right? So if all you had was, I don't know, let's say example, $30 a month that you wanted to invest in a company stock that's, $100 a share or 150, 200, $500, you can still get ownership, So not all brokerage accounts allow you to do that. So if you don't have one, you can inquire from that brokerage account company, do they allow you to buy fractional shares? And also the customer service aspect of it too, being able to talk to someone. Some may not give you that option, or they may be restricted hours. Okay.
Any other questions? In the meantime, I do want to just remind everybody that we do have several other webinars on Sunday. We're going to be interviewing the founder of Vision Virtual Learning, talking about adult education. And then at the end of the month, on the 27th, we'll have another webinar about basic digital literacy and introduction to AI. So I'll put our website in the chat. Feel free to read the descriptions and to register. Again, there's no question too hard or too simple. I mean, like I said, I know, especially to that point about the brokerage accounts, I did do some research on a couple of them after taking Mr. X course. Oh, I'll just say this because I think some people were here when I mentioned it. So I met Mr. X. I saw one of his a session similar to this that was advertised on I believe either on Facebook or through an email. I can't quite pinpoint how I found out about it, but I attended the session. I did purchase one of the paid sessions, and a lot of, because I wanted a little bit more information before I decided to step out into it. I had been thinking about investing. I know I wanted to diversify my retirement. And so but I wanted to get more information before I just, did it. And of course, you could, there's a lot of stuff online, but I wanted that one-on-one. I wanted that personal touch as far as getting that education. And so after the course, I did open a brokerage account. Every time I get paid, I put a little bit of money in it. And I do have one of the accounts where I can, depending on the price, I'm able to buy a whole share. Otherwise, I don't quite have enough, but it's, putting a little bit until I get to a share. So it's been kind of fun, I'm doing it at a level where I'm comfortable with it, where I'm not feeling like, I'm just throwing a whole bunch of stuff in there. But I feel like that, you know, I went from zero to now I'm actually doing it. So again, I hope, this has been informative to you. If you have any additional questions, I think Mr. X has put his information in there. And yeah, one last call.
Yeah, yeah.
Questions?
Hopefully everybody got a lot of value, out of the webinar. You know, um, today you learned some things that, maybe you didn't know, before, about the stock market. And just to let you know, I do, I showed you my website, but I also do stock market trainings for, you know, church and religious organizations, fraternities, sororities. I even have a program for young people. Yeah, yeah, yeah. So I'm just here to, share this information and try to empower, individuals and, families and communities, how to build, excuse me, how to build wealth. It's um I would say this as a summary. Um Not knowing how to um build wealth in a capitalistic society that which we all are living in right now is like um a fish not knowing how to swim. It's not going to survive. Think about it, Oh, someone says, can you articulate more about your programs for young people? Yeah, so I have a program. Um, I have a program. It's a 4-session program called Stock Market Investing for young people or teenagers. It's a 4-session program um, that organization will hire me to do, for their constituency, which is typically young people, and each session meets for about an hour. I do it live, and the organization typically would compensate me for my time and my services, and then they would let their membership base, which is the young people, take the 4 session stock market training for free. Yeah, so that's what it entails. But I put my email info at mrxstockmarketacademy.com here. So if someone wants to get more detail about it, you can definitely speak to me one-on-one, offline. Um, and as I mentioned before during the webinar, just as a recap, any of you here that decide that you want to sign up with my academy with any of the paid sessions, 25% of the gross sales that come in will be donated to community outreach partners. So if you really believe in the work that community outreach partners for empowerment is doing, a portion of the proceeds will be donated to them to benefit their activity. So when I look at it from this standpoint, this is how communities thrive, right? Because we're working together, right? Um, if you decide to sign up for any of these sessions, you're getting information that you typically may never have learned before in terms of the stock market and how you can build wealth. Because once you learn this, you're going to be able to teach it to anyone in your family, right? Or your friends, right? Um, a portion of your proceeds will go to benefit the activity or the community work that Community Outreach Partners is doing. So this is how, a community is developed and thrives together, right? It's like a business can't exist if it doesn't have any customers, right? Right? People say, hey, how come we don't have this type of business in our community? Well, if it was there, would you support it? Because then maybe somebody would open it. But so it works hand in hand, right? It's like, you can't have a functioning family if the family doesn't work together or stay together, right? Right. So this is how this all, this all works, So, um, once again, I encourage you all to follow me. I'm on Facebook, I'm on Instagram.
We do have
Um,
another question from Facebook.
oh, you do? Okay. And I see
Uh-huh.
another question here. What is the Facebook question?
It says, at what age do you suggest we start exposing investments to our children?
Okay. I'm going to answer that question two ways. Um, the first thing is, in my opinion, um, everyone who has a child should have a stock market investment account for their child. Okay. And even if it's not your child, it could be your grandchildren, right? If their parents don't have a stock market investment account for their for their children, for whatever reason, don't want to start one. If I was somebody's grandfather, okay, I would start a stock market investment accounts for my grandchildren, okay? Because at some point in time, we're all going to move from being children to young adolescents to young adults. And what is that thing that we're all going to need? We're going to need money. You can't do anything without capital, right? So we're gonna need money to go to college, go to trade school, get our first apartment, buy a home, or do this or do that. So having an asset base that someone could build for someone, your children, your grandchildren, especially something that you could start with at your own budget. You can say, $20 a month over a 20-year time period, earning a certain interest rate can compound to hundreds of thousands of dollars if that's all you have in your budget. So I would have an account for my children. I would have an account for my grandchildren. Now, in terms of exposing them, I would say, you can talk to them maybe as early as, depending on the child, maybe as early as maybe 7 years old about the stock market. You just got to know how to explain it to them. But at the same time, as they start to get a little bit older and mature, and if you have this investment account on their behalf and you're pretty tech savvy, you could have your child sit down next to you and say, look, you see this product that I buy for you, or products that I buy for you, you also have ownership of this company in the stock market because this company is a publicly traded company in the stock market, right? So while you are a consumer of this company's product or service because I buy you this item, you also have ownership in it at the same time, right? So that's the thing. I'm all about trying to change people's mindset to say that, you know, we all need to consume things, but you can be a consumer and be an owner at the same time. When I walk through the mall and I look at the stores that are in the mall, if I have ownership in um in those companies through the stock market, I have ownership in those companies. So while people are going in and out of those stores spending money, the value of my investment is going up, right? So this is one of the things that I'm trying to get across to people is there's multiple ways to make money, right? You can make money through the job market. make money through the stock market, through the real estate market, through the business market. There's nothing to say that you only have to make money in one market. But if you're really going to build wealth, you need to learn how to evaluate investments and invest in appreciating assets. And one of the things, as I mentioned before, that I love about the stock market, it levels the playing field, for everyone to get involved. The only difference is that many people are not educated about how the stock market works and how external factors such as the Federal Reserve, the interest rate, the unemployment rate, et cetera, how it affects the stock market. But it's probably when you learn about it the way how I learned about it, and hopefully some of you will join the academy, it's probably one of the easiest ways to make money for yourself or to build an asset base for yourself, you know? And then over time you will see, that you built an asset, and then there's different ways on how you could utilize that asset base. I see somebody said, did I miss information on day trading? We didn't really talk too much about day trading in this webinar today, which is basically, buying and buying shares of stock and selling them, very quickly, or not holding them for a long period of time. That is a way to make money in the market. But once again, if you're going to engage in day trading, you need to be educated about day trading. So what's the best investment that you could make in this world? In your education about anything that you want to know. Anything you want to know in this world, whatever it is, the best education you could make in yourself is learning everything that you need to learn about that thing that you want to learn or that thing you want to do, because that increases the probability that you're going to be successful in what you're doing, as opposed to just trying to stumble upon something and go through trials and tribulations. Nobody wants to do that. So once again, follow me on Facebook, follow me on Instagram. I got a lot of information there, but I highly encourage you, share the word about my company to your friends, your family. We're here for the community, to try to help as many of us, to empower ourselves, and to empower our families and change our situation, and being economically empowered, you know, can definitely do that. Any more questions coming from Facebook?
No, that was the only one. And again, the Facebook Live will be on my page for the next 30 days. Facebook just mentioned that they're going to start taking down Facebook Live videos that are longer than 30 days. So it'll be up there. And if people who are watching this at a later date have questions, just feel free to put them in the chat, and we'll both monitor it and try to get an answer to you. So thank you again, Mr. X. Appreciate your time and for kicking off our financial literacy series. Thank you all for joining, registering and joining, and those who are watching. And we appreciate your time, and I hope you have a great rest of your evening.
Yes, thank you, Jonah. Once again, the collaboration. Look forward to working with you in the future. I want to thank everyone for registering and for joining. And if anyone has any questions, just reach me at info@Mr. X Stock Market Academy, or just message me on Facebook, Instagram. Okay. Thank you so much.
Awesome. Take care.
Take care. Bye-bye.